Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the identification of this move to the downside in a wave C, 1 or A, because that is very important for your different Elliott Wave scenarios and the probabilities that you're going to give to these scenarios. If we look at this structure as a wave C, it has to be part of an expanding flat ABC, because this high over here took the high over there. So it has to be a regular flat in this case, taking a trend-based fib from the high to the low of A to the high of wave B. Putting the targets on a regular flat will give you the most common target area for a regular flat, which is between the 1 and the 1.236. You can see that this low over here respected the 1.236 very nicely. And yesterday I spoke, well, the maximum low I would like to see is taking this wick and then move up. And that is not going as quickly as I would have hoped. And probably now, because candles closed also below the 1.236, like if it was a wick up closing inside this area, it would have been nicer than candles now closing below the 1.236. And even on the 1 hour, you can see candles have closed below the 1.236, which isn't really something I like to see and lowers the probability for this being a regular flat. Besides, a regular flat is also a more rare pattern. So that means the probabilities increase for this being a wave 1 or a wave A, for then a 2 or B, and then continuation to the downside, depending on how price over here is going to move towards the upside. If we then go to the first scenario that I like to share with you, it is an ABC expanding flat. In this scenario, we then have a 3-wave A looking for a 3-wave in B, and then we have a bigger wave C towards the downside. And if we look at what is inside wave B, we are looking for a WXY, a 3-wave in W. Then we have a regular flat in X, and then you'd be looking for a 3-wave up in Y, meaning that the low of wave X over here is the low of a regular flat, right? 3 waves, and then this has to be the low, or the low is in, and this is the beginning of a 3-wave structure to the upside. But again, it depends on how price now moves up, and it isn't going as quickly as I would have liked. Now, in this scenario, the most common target for a wave B in green is between the 1.236 and the 1.38, and the most common target for a wave Y is between the 1 and the 1.236 as well, which is both between 31.9k and 32.4k, which kind of includes the 2022 range highs for then a liquidity grab and a move towards the downside. However, a question we have to ask ourselves as well is, how much is there still to gain for market makers after the double top wick? Because over here, price wicked this double top. So people that have been shorting in this range got stopped out, and now price is moving to the downside. It grabbed the liquidity, price is moving down. How much is there left over here? How much liquidity can the market makers generate or grab around the 2022 range highs for then a move to the downside? Like filling their longs with the liquidity of market, or filling their shorts with the liquidity of market longs and then move it down. That is the question, right? Like we already wicked the double top, moving down. It fits the scenario of continuation towards the downside. So this is an important question. And of course, throughout the day today, we will observe what price will do. And we also have some news which might cause some interesting volatility. If you then look at the second scenario, then we're looking at a WXY, where the regular flat over here is only the first structure in wave Y, because we're looking for a 3-wave structure in a wave Y as it is, which is then a first structure, regular flat, then you get a second range structure towards the upside, and then you get a third structure to the downside, where the most common target for wave Y is between the 1 and the 1.236, which is between 29.4k and 28.9k. So down, up, and then eventually another wave down. If we look at time, wave W and wave Y do have a time relationship as well. And you can see that the 1-to-1 as it stands is positioned on Monday the 10th of July, which is nice. It's nice for waves to end during the week and not on the weekend. So somewhere wave Y ending over here would then be my preferred scenario in this particular scenario. But this scenario does include that regular flat. If we then go to the, I guess, most bearish scenario, is that this over here is the high of a wave B. So we then have a wave A, 3-wave structure, wave B, 3-wave structure that is already finished for then a continuation to the downside in a wave C. Now you can see that this wave B high hit the 1 to the 105, which is taken from the high of wave A to the low of wave A. And this is the most common target for a regular flat. But now the regular flat isn't taken from this high to this low, with then this being an ABC. Now it's a bigger regular flat, in this being an A, B, and then you'd be looking for deeper prices towards the downside. Most common target for a regular flat, again, between the 1 and the 1.236, which is between 29.5k and 29k, which is in confluence over here with the target box, the support area that we have between 28.8k and 29k, which is quite nice. One has to always keep in mind, once the high of an A is taken, can there still be an expanded flat in an A, B, but then the price targets for C are going to be deeper. Now, usually a minimum target for a regular flat is hitting the 105 fib. And you can see it actually missed out on hitting the 105. But we have to keep it in mind, and if that is the case, the targets for a wave C and an expanded flat are deeper, most commonly between the two 1.618s, which is between 28.3k and 28.1k. My main problem is, however, that this for me is in the middle of nowhere. It's in between the two support areas that I have, and the rare target for an expanded flat wave C is all the way down here at the 2.618, which is sitting at 26.4k. So that's very interesting, right on top of the target box, which we have between 26.2k and 26.5k. Now the longer price is going to range over here, the more likely it is that we could get a wave 1, 2, and then continuation to the downside in a wave 3, so that we're going to get some sort of an impulse to the downside, where this is the first structure, we get a second structure, and then we move down in a third wave, maybe also with the news that we have today. And very important resistance area for a wave 2 is right above price at the moment, between 30.5k and 30.7k, which could then be the resistance for continuation to the downside. How price is going to interact with this move over here, or with this structure over here, this resistance is going to basically decide the up or the downside, in my opinion. If we then look at the CVD divergences and we zoom in locally at what's been happening, it's not too much. I mean, we had some bearish divergences, so yeah, we had to move to the upside, but then price started to move down, and you can actually see on the 15-minute over here where we had lower highs on price, higher highs over here on the yellow CVD, bearish CVD divergences, another push towards the downside. And we also had bearish CVD divergences with this little range over here, as we had a lower high on price, but we had, as you can see over here, with this part of the yellow line, which represents the green candles, we had a higher high on the yellow CVD, bearish CVD divergences, lowest the target has been done. So now the CVD locally is neutralized, and we have to wait and see what's going to happen over here for price in the upcoming hours. If we then look at the probabilities, well, things keep changing, of course, depending on what we see on price. And I mainly took into account the regular flat low over here, where we even have 1 hour candles closing below the regular flat target, which is not really something you like to see. So at the moment, the probabilities, because of that as well, and the fact that price is not really moving to the upside as quickly as I would have liked, the probabilities for me are highest for a continuation to the downside and then an impulsive structure. So we then have a wave 1, looking for 2, and then we're looking for a 3 towards the downside, where then the invalidation is going to be taking this high, because this is now the beginning of a wave 1. You do not want price to go above this particular high. So this is currently like the one I'd be looking for, which is part of an A, B, and then a C to the downside structure. On place number 2, we then have this as a regular flat, potentially a bounce and continuation, or it's actually like, I don't really have a 2 or 3. It's almost like the same probability, or we go up for B and then down for C. But again, the question, how much is there still to gain? We do have some news today, And that is, of course, over here, Friday, 2:30 p.m. Central East European time. We have high impact news, the red flags, so you can expect some volatility, which will be very interesting because I hope we're going to get a direction out of this range. Now, before it's going to be 2:30, I, of course, upload another video at 1 p.m. Central East European time. So let's observe what price is going to do locally and then see what it does with the probabilities of the different scenarios. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.